Well, folks, home sales dropped more than 9% in December, even though mortgage rates were lower. So that means the market is crashing, right? Well, not so fast. Let's not panic. It's a statistic that makes people scratch their heads, though. The housing market looked like it was gaining momentum, and then in December, hit the brakes. So what's really going on here, and what does this mean for you if you're thinking about buying, selling, or investing into real estate? That's exactly what we're going to be discussing in today's video. And by the way, if you're new here, I'm Alex. This is your Friday market update. Now, these videos exist for one primary reason: to help educate, inform you so you can make smarter, more confident real estate decisions. Now, if you find this videos like this helpful, make sure you like it and subscribe to the channel for more weekly real estate content every single week. Now, let's talk about what the market is doing right now. According to the National Association of Realtors, pending home sales, which tracks contract signings, fell 9.3% in December compared to November, and were down 3% year over year. That, my friend, is a big deal, because pending sales are a forward-looking indicator that tell us what closed sales are likely to look like in the next month or two. This slowdown was unexpected, to say the least. Now, for several months, we've been seeing steady improvement. Mortgage rates had dipped a little, buyer confidence was coming back, and existing home sales actually jumped 5.1% in December, hitting their strongest pace in nearly 3 years. So why were there more homes closing but fewer buyers signing new contracts? The short answer is inventory. Even though mortgages rates averaged around 6.9%, which helped push buyers to the closing table, new listings didn't keep up. In fact, the number of existing homes for sales dropped 18% from November to December. Now, this wiped out several months of gradual improvement and matched some of the lowest inventory levels that we've seen in 2025. Now, economists says buyers are hesitant to commit when choices are limited. I mean, it really does make sense. I mean, after all, most people don't want to make one of the biggest financial decisions of their lives when there are only a handful of homes to choose from. The hesitation shows up in the data for December, and that's not the whole story. Seasonality also plays a role. December to say it's a tricky month is an understatement. You have the holidays, you have travel, time off of work, and many parts of the country are colder and snowier weather than usual. Now, the Midwest and Northeast were really hit especially hard, while parts of the West were dealt with unusual weather patterns that also slowed activity. Now, the big question now is whether this was just a winter blimp or the start of a bigger trend that we need to be concerned about. Now, even the National Association of Realtors chief economist says it's too early to tell. So the long story short, the next couple months will be critical. Now then, let's break down what this all means depending upon where you sit in the market. Now, for buyers, well, this slowdown isn't necessarily bad news. Lower mortgage rates are still bringing opportunities to buy, and once we move into February and March, more listings typically hit the market. Now, if inventory increases like it usually does heading into spring, buyers may have more options and potentially more leverage than they've had in some time. Now, for sellers, well, this is a reminder that demand still exists, but pricing and timing is really important, really matters. Homes are selling, but buyers are being selective. If inventory stays tight in your area, well-presented, well-priced homes can still perform very well. But if new listings surge in the coming weeks, competition will increase quickly. Now, for investors, this environment rewards patience and market-specific knowledge. National headlines can be often misleading because not every market is slowing down. In fact, several markets are actually defying the national trend. Cities like Louisville saw pending home sales jump nearly 24% year over year. San Antonio, Virginia Beach, Charlottesville, Boston, Phoenix, and Miami all posted solid annual gains in pending sales too. These are markets with strong job growth, population movement, or affordability advantages that continue to attract buyers even during seasonal slowdowns. That is a huge reminder that real estate is local. We keep repeating, echoing that on this channel. What's happening nationally doesn't always reflect what's happening in your specific market. So here's the bigger takeaway as we head into the heart of 2026. The housing market isn't collapsing, but it's also not fully stabilized. It's sensitive to local inventory levels, to consumer confidence, to weather, and to expectations about rates. In other words, small changes are having outsized effects right now. Now, as we move closer to spring, inventory will be the key metric that we want to watch here. Now, if listings rise and rates remain relatively steady, we could see buyer activity rebound quickly. Now, if inventory stays tight, though, expect more hesitation and uneven results from the market to market. And as usual, it's a wait and see situation. As always, friends, thanks for watching this week's Friday market update. If you want to stay ahead of what's happening in real estate and to understand what it actually means for your goals, make sure you join the Living in California community by liking, subscribing, and sticking around for future videos. And if you happen to be in California looking to buy or sell or have some general questions about the real estate market, I'm a real estate agent right here in Orange County. Feel free to reach out to me. All my contact information is down below. But friends, that is it for me. Enjoy your day, and I will see you in the next video.